Thank you for tuning into the Selling for Premium podcast channel, where we chat about writing options, aka selling options, to generate income. This podcast series will touch on various aspects of options writing, from what is options writing to covered calls and cash secured puts to risk management and other important considerations when selling options. We assume you have a basic idea of what an option is and how the Greeks work on an option. If you don't know what an option is, then we highly recommend you learn more about it first before tuning into this podcast. There are plenty of resources out there that you can research online to learn more about what an option is and how it works. That said, welcome to the channel and the podcast. Please like, follow, and subscribe to stay tuned in. We appreciate your support. For our first podcast episode, we wanted to focus on setting the foundation for writing options, aka selling options. Each episode that follows will continue to build on this foundation as well as expand your knowledge into various aspects of selling options. One cool thing that we've explored with this podcast is to utilize AI in presenting the content. With that said, let's go ahead and kick off the first episode with our AI hosts, Adam and Isla.
Today, we're going to do a deep dive into options trading.
Oh, yeah.
We're going to be looking at buying versus selling options.
It's a good one. Yeah.
We got a listener question that we're going to try to tackle today, and they're asking, which one is riskier, buying options or selling them?
It's a great question, and one that honestly deserves a lot more unpacking than you sometimes see.
Absolutely. We're going to be looking at time decay, implied volatility, all that good stuff.
That's right. We're going to be talking about the idea of unlimited versus limited profit, all that kind of stuff.
And something that I think will be very interesting is that most options actually expire worthless.
Oh, yeah. That's a big point for a lot of people who like to sell options.
For sure, for sure. Well, let's get right into it.
So, to start with, we need to be clear about what exactly options are.
Right.
Options are these financial instruments or contracts that give the buyer the right, but not the obligation to buy or sell an underlying asset at a specific price.
Yeah, that's called the strike price, right. And all of this has to happen by a certain date.
Exactly.
Which is the expiration date.
And it's this flexibility that makes options so appealing to so many traders.
For sure.
You know, they can be used for a variety of purposes, like hedging against potential losses.
Right.
Or you can use them to speculate on price movements in the market.
Exactly. And so when we think about buying options specifically, I think one of the biggest appeals is that your maximum loss is limited to the premium that you pay.
Right. That sounds good. Right.
Sounds appealing on the surface, yeah.
There's a catch, and it's a pretty big one.
Oh.
Which is that the value of options is constantly being eroded by something that's called time decay.
Yes. Time decay. Otherwise known as theta, if you're a real options nerd like me.
Or me.
So even if you're right about, let's say, the direction that a stock price is going to go, if it doesn't move far enough in your favor before that option expires,
Yeah.
you could still lose money.
Oh, yeah. You're absolutely right. Even if you're right about the direction, that stock has to move far enough in that direction for you to actually be profitable.
You're basically racing against the clock. So not only do you need to be right about which way the price is going to go, but you also need to be right about when it's going to get there.
Exactly. Yeah. And that's a big one. A lot of people miss that part.
Now, while it's true that gains from call options, for instance, can theoretically be unlimited,
Okay.
if the underlying asset, absolutely moons,
Right.
the odds of that happening are quite low.
Yeah. It's often compared to playing the lottery.
I see.
High reward, but, pretty low chance of winning.
Not a strategy I like to use personally.
Me neither.
Now, let's talk about the other side of this coin. Selling options.
Okay. Yeah. Selling options is where you're the one collecting that premium up front.
Right.
This can be tempting, especially to new traders.
For sure.
But you're also taking on the obligation to potentially buy or sell the underlying asset if the buyer decides to exercise their right.
So this is where I think things start to feel a little more risky for people.
Right, and this is where we need to talk about this idea of unlimited risk.
Yeah, because I know a lot of people hear about unlimited risk when it comes to selling options, and, they get spooked.
Of course.
And rightfully so.
You're essentially saying that your losses could be infinite.
Right.
But in reality, there are things built into the market that usually prevent truly catastrophic losses from happening.
Like what?
like circuit breakers on the exchanges.
Ah, okay.
They halt trading if things get too crazy.
So it's kind of like a safety mechanism for the market as a whole.
Exactly, yeah. So it's not quite as scary as it sounds.
Now, in our research, we saw that a large majority of options contracts actually expire worthless. So that would make selling options seem a little less risky, wouldn't it?
That's a point that a lot of people who sell options like to make, yeah.
So if most options expire worthless, why are we so worried about this unlimited risk thing?
Well, because while most options do expire worthless, not all of them do.
And when they don't, and the market moves against you, that's when you can have those really big losses.
So we're not saying that selling options is risk-free by any means,
No, not at all.
but it's also not as dangerous as, some people make it out to be.
Exactly.
So it's all about managing your risk appropriately.
And that's what we're going to be talking about more in the next section.
For sure. Okay, so let's move on to implied volatility.
All right.
This is one of those concepts that I think a lot of new traders get tripped up on.
Yeah, it can be a little confusing.
So what exactly is implied volatility?
Well, it's basically the market's expectation of future price swings.
Okay.
So when implied volatility is high, it means that the market is expecting big price moves, up or down.
And when it's low, the market is expecting smaller moves.
Right.
So how does this impact options pricing?
Well, when implied volatility is high, options are generally more expensive
Why is that?
because the buyers are willing to pay more for the potential of those big price swings. So it's like they're paying a premium for the possibility of hitting a home run.
Yeah, exactly.
Okay, that makes sense. And so I guess when implied volatility is low, options are cheaper
Right.
because the market isn't expecting those big moves, so there's less potential for a huge payoff. So this all ties back to the idea of risk and reward, right?
Yeah, it all comes back to risk and reward.
Buying options when implied volatility is high might offer the potential for bigger gains, but it also comes with more risk.
Absolutely. Because you're paying more for those options up front,
Right.
so you have more to lose.
On the other hand, selling options when implied volatility is high
Okay.
means you can collect higher premiums,
Yes.
but you're also taking on more risk.
Exactly.
Because if the market does make those big moves against you,
Mhm.
your losses could be greater.
So it's always a balancing act, right?
Absolutely. We've covered a lot of ground here in this first part.
We have, yeah.
We've talked about buying options, selling options, time decay, and implied volatility.
All important stuff.
In the next part, we're going to get even deeper into some of the intricacies of options trading.
That's right. We'll talk about things like the Greeks and some of the different option strategies that traders use.
So make sure you stick around for that. You don't want to miss it. Okay, so we just talked about time decay and implied volatility, and we
Yeah.
even threw around the word Greeks, which I think we'll talk about in a little bit.
Yeah.
But for now, maybe we should just take a step back
Okay.
and kind of simplify things a little bit.
Yeah. Good idea.
Make sure everybody's still on board with us here.
Definitely.
So when you're buying an option, you're basically making a bet on two things, right?
Yeah, you're betting on the direction of the price move
Hmm.
and the timing.
And the timing, exactly.
Because remember that time decay?
It's always ticking away.
Exactly, yeah.
So you got to be right about where the price is going to go, but you also got to be right about when it's going to get there.
That's right. So it's a little bit like trying to catch a wave.
Okay, I like that.
If you time it perfectly, you get a great ride.
Yeah,
But if you're off, even by a little bit,
you could get wiped out.
exactly.
All right, so that's buying options.
Mm-hmm.
What about selling options? If buying options is like surfing,
Okay.
what's selling options like?
Well, a lot of people compare selling options to being the casino.
Ah, interesting.
You're collecting premiums from lots of different players,
Mm-hmm.
and statistically, the odds are in your favor in the long run.
But just like a casino, there's always the risk that one bad bet could come along and wipe you out.
That's true. And that's why risk management is so important for option sellers.
For sure.
You got to be really careful about how much you're risking on any given trade.
So going back to our original question, which is riskier,
Right.
buying or selling options?
I think the answer is it depends.
It depends, yeah.
It really comes down to your personal risk tolerance,
Mm-hmm.
your investment goals,
Right.
and your level of understanding of how options work.
So there's no right or wrong answer.
No, not really.
It's all about finding what works best for you.
Exactly.
Okay, so let's say you're brand new to trading, but you're curious about options.
Right.
Where would you even start?
I would always recommend starting with education.
Yeah.
There are a lot of great resources out there these days.
For sure.
Books, online courses, even podcasts like this one.
Yep.
Take the time to learn the fundamentals before you even think about putting on a trade.
So don't just jump in head first.
No, definitely not.
So once you have a good foundation of knowledge,
Okay.
then you can start to think about your risk tolerance.
Right. How much are you comfortable potentially losing on a single trade?
If the answer is not much, then maybe buying options is a better place to start.
Yeah, because your maximum loss is limited to the premium you paid,
Right.
but you could still lose it all.
That's true.
So it's not risk-free.
Now, let's say you're someone who is a little more comfortable with risk.
Okay.
You've got some experience under your belt, and you're really interested in the potential rewards of selling options. What should you keep in mind?
I think the biggest thing is that selling options requires a different mindset than buying options.
Oh, how so?
Well, when you're selling options, you're kind of like the insurance company.
Ah,
You're collecting premiums in exchange for taking on the risk that the market might move against you.
so it's more of a statistical game.
Yeah. You're not necessarily trying to hit home runs on every trade.
Mm-hmm.
You're looking for consistent wins over time.
So it sounds like patience is important,
Absolutely. Patience and discipline are key.
and probably a good understanding of how to manage your risk.
Oh, yeah. That's essential.
Okay, so we've talked about the differences between buying and selling options. We've talked about risk tolerance and the importance of education.
Right.
But I feel like we're still dancing around the main question,
Okay.
which is riskier.
Yeah, I know.
It's a tough one to answer definitively, isn't it?
It is, because there are so many factors to consider.
It's kind of like asking which is riskier, driving a car or flying a plane.
Right.
Both have their own risks,
Mhm.
and the right answer depends on a lot of different things.
Like your skill level, your experience,
Yeah.
and your comfort level.
So it's not a one-size-fits-all kind of thing.
Exactly.
Okay, so it really does sound like both buying and selling options have their own, like, unique sets of risks and rewards.
Yeah.
And it sounds like the best way to go about it, it depends on the trader, how comfortable they are with risk, how much they know about options.
I think that's right. Yeah.
So if someone's listening and they're like, all right, I've done my homework, I feel good, I'm ready to start trading options, what advice would you give them?
Well, I always tell people, start small.
Yeah.
Don't jump in and risk, a huge chunk of your capital.
Right.
Start with small trades, get a feel for how things work.
So kind of like dipping your toes in the water before you jump in the deep end.
Exactly.
And, maybe even find a mentor or someone who's more experienced.
Oh, yeah. A good mentor can make a world of difference.
It's always good to have someone who's been there before.
Mm-hmm.
Now, we've talked a lot about, the technical side of options trading,
Right.
time decay, implied volatility, all that stuff.
The Greeks, yeah.
But what about the psychology of trading?
Oh, that's huge.
I feel like that's something that a lot of people don't talk about enough.
Yeah, it's just as important as the technical stuff, if not more so.
So how do you, manage the emotional side of trading?
Well, one of the best things you can do is to have a trading plan. Before you even enter a trade, decide how much you're willing to risk, what your profit target is, and when you're going to get out.
So you're not just making decisions on the fly.
No, you got to have a plan and stick to it.
Otherwise, you can get caught up in the emotions of the moment.
Exactly, like fear and greed,
Yeah, those can really mess you up.
they can cloud your judgment.
So have a plan, stick to your plan, and don't let your emotions take over.
That's great advice.
And I think it's also important to manage your expectations.
Oh yeah, options trading is not a get-rich-quick scheme.
It's not. It takes time and effort.
And patience.
Lots of
You're
patience.
going to have losing trades. Everyone does.
Right.
The key is to learn from your mistakes and keep getting better.
So it's a journey,
Yeah, it's definitely a journey.
not a destination.
Right.
Now, before we wrap things up here,
Okay.
I want to leave our listeners with a little thought experiment.
I like thought experiments.
Imagine that you're looking at a particular stock
Okay.
and you think it's going to go up. It's like significantly up.
In what time frame?
Let's say in the next month.
Okay.
Would you rather buy call options on that stock?
So you're betting that the price is going to go up
Yeah,
and you want to profit from that move.
exactly.
Oh.
Or would you rather put options on that same stock?
Which is essentially betting that the price is not going to go down below a certain level.
Right.
That's a tough one.
It is, isn't it?
It's a classic options trading dilemma.
And I think it really illustrates the point that we've been making throughout this episode.
That there's no one-size-fits-all answer.
Exactly.
It depends on your individual circumstances and your risk tolerance.
So it's all about weighing the potential rewards and risks.
Yeah.
And finding the approach that makes the most sense for you.
That's what it all comes down to.
All right, well, that's it for options trading today.
I hope everyone enjoyed it.
I hope so too.
We covered a lot of ground.
We did. We talked about buying options, selling options, time decay, implied volatility, and even touched on some trading strategies.
Yeah, it was a good one.
If you're interested in learning more about options,
There are tons of resources out there.
there are. Definitely do your research and keep learning.
Options can be a great way to, enhance your trading toolkit.
But you got to know what you're doing.
Absolutely.
All right, everyone. Thanks for tuning in.
And happy trading. And make sure you subscribe to this podcast and follow us on X to be notified of our next podcast episode. Just click on that follow or subscribe button.
Nope.
Our X handle is the @, followed by selling the number 4, premium, all one word.
We'll see you next time.